Many people want to think that they are sophisticated investors. Every so often I hear the dreaded remarks coming from across the table when I meet with folks of, Richard, I am a sophisticated investor. Well, what the definition means is being sophisticated just often means that you're not the average investor. And it can be for whatever reason. It could be for because of the career you lead, because of your net worth, because of your job, your education. So there's this aura that you feel that you're sophisticated, and no wonder of sophisticated investors, they want to wear that badge of being sophisticated because they are offered all sorts of different investments, private equity investments, hedge funds, and other alternatives that usually ordinary investors will be actually lucky that they never see. And like they say, wealth has its privilege. So let me give you a little warning, folks. Brokers love the term sophisticated investor. Why? Because it qualifies you as a sophisticated investor to buy high commission products like hedge funds or other complex, alternative investments that neither you nor the broker selling you the product nor the people that are supposedly investing the product will actually understand. Okay? If you don't believe me, just read, every time you read a story in the Wall Street Journal about the collapse of a hedge fund or a story about fraud, the word sophisticated investor is always in the article. And it's used to describe the folks that are swindled and sometimes have lost it all. Just recently, I actually printed up a chart here under list of trading losses. These are folks that have lost a considerable amount of money using sophisticated investments and being sophisticated investors. The number one on the list is Morgan Stanley and Howie Huber, who lost $9 billion. And this not only includes this doesn't include money that was lost by just investors that were investing with Howie. And what are these sophisticated investments that they're using? Credit default swaps, European index futures, credit default copper futures, leverage bond investments, oil futures, and the list goes on and on. Everything from $9 billion losses to $7 billion losses to 6 and 5 and so on. And even remember the case of Bernie Madoff, who was the sophisticated using sophisticated investments, who would average 10.5% every single year, no matter what. So, folks, word to the wise. The next time you hear an advisor say that this is a sophisticated investment, I want you to run to the door. I caution all investors to avoid brokers who claim that they are able to beat markets through these sophisticated investments and alternatives. Okay? There is no one who with any or there's no credible evidence that there's no one that with their expertise can pick stocks or commodities or time the market or pick outperforming mutual funds, despite their claims to the contrary, that can beat the market on a consistent and predictable basis. I also caution you, as a supposed sophisticated investor, to heed the advice of Warren Buffett. Okay? I'm not a big fan of Warren Buffett, but he does say some things that are of some value sometimes. And Warren Buffett said, what matters isn't how expert you are, but how well you understand the limits of whatever your expertise is. Okay? Now, the more people know, the more they come to believe that they know even more than they actually do. And this will absolutely kill your portfolio and kill your retirement. Well, I'll see you next time on Financial QB TV. And don't forget to call us about your what we are thinking about questions, as opposed to your, hey, Richard, listen to what we did announcements. Again, see you next time.